Right now, something very unusual is happening in the gold and silver market, and most people are completely missing it. This is not just another price move. This is not just another correction. What we are seeing right now is a rare structural shift that only shows up a few times in a generation. And when these signals appear, they don't come quietly. They come before some of the biggest moves in the entire cycle. Here's the truth. The biggest buying opportunities in gold and silver have already happened. The smart money moved early, months ago. But what's happening right now could be even more important because this is the phase where markets don't just rise, they accelerate. Welcome to Gold Silver Scope, where we break down gold and silver in the simplest way so you can understand what's really going on behind the charts, the headlines, and the noise. Let's start with the reality most people don't want to hear. Major long-term buy signals were already triggered earlier. The first strong signal came around March to April 2024, when silver was still trading near lower levels and gold miners were deeply undervalued. Then another confirmation came in mid-2025, strengthening the bullish case even further. But the most important signal, the final major entry point, came later, during a breakout phase that confirmed the trend. Now here's where most people get it wrong. They look at today's prices and think they missed everything. And yes, from a long-term investor perspective, the perfect entry points are behind us. But that does not mean the move is over. In fact, it may be just entering its most powerful phase. Markets don't move in straight lines. Even in strong uptrends, you will always see sharp pullbacks. And what we recently witnessed, that sudden drop, was not a breakdown. It was a classic shakeout inside a bigger uptrend. If you look at the structure carefully, nothing important has been broken. Long-term momentum is still intact. The trend is still alive, and that changes everything. In fact, this type of sharp sell-off often serves one purpose: to remove weak hands from the market. Late buyers panic, they sell, and strong hands quietly take their place. This is how powerful trends reset before the next move higher. Think about this for a second. If someone had entered silver at earlier signals, their average position would be far below current levels. So even after volatility, the bigger picture remains strongly in profit. That's the difference between chasing a market and understanding it. Now the key question is, what comes next? Based on the structure, we are likely in the middle phase of a much larger move. This phase is often confusing. Prices move sideways, volatility increases, and sentiment becomes uncertain. But underneath all of that, the trend is preparing for its next leg. And if this analysis is correct, then what comes next is not just another rally, but a potential acceleration phase, the kind of move where prices start rising faster, stronger, and with much more attention from the public. But to understand why this could happen, we need to go deeper into the structure, the relationships between gold, silver, and the broader market, and what they are quietly signaling right now. To truly understand what's happening, you need to look beyond price and focus on relationships. One of the most important relationships in this entire market is silver compared to gold. And right now, silver is still extremely undervalued relative to gold. Historically, silver has traded at a much higher percentage of gold's value. In previous cycles, especially during strong bull markets, silver tends to outperform gold significantly. This is not a theory. It's a pattern that has repeated many times. At peak moments in past cycles, silver reached levels where it was multiple times stronger relative to gold than it is today. Right now, even after recent gains, silver is still sitting at a relatively low valuation compared to those historical highs. What does that mean in simple terms? It means silver still has catch-up potential. And in strong bull phases, that catch-up can happen very quickly. The same story is unfolding with mining stocks. Historically, Gold and silver miners have traded at much higher valuations relative to gold itself. But over the past decade, they were heavily undervalued, reaching extremely low levels compared to their historical averages. Now, something important has changed. Recent data shows that mining stocks have started to break out of long-term basing patterns. This is a very important signal because it suggests that the market is beginning to recognize their value again. And when miners start outperforming gold, it usually signals strength across the entire precious metals sector. Now let's talk about the recent drop that scared many investors. From a technical perspective, this drop was sharp, but it was short-lived. Prices briefly broke below recent lows, stayed there for a very short time, and then quickly recovered. This type of move is often called a false breakdown, and false breakdowns are powerful signals. They show that the market rejected lower prices. It tried to go down, but couldn't stay there. And when that happens, it often leads to strong moves in the opposite direction. More importantly, this drop did not break long-term momentum. That is the key difference between a correction and a trend reversal. If long-term momentum had broken, the outlook would be completely different. But right now, all major long-term indicators remain intact. So what we are seeing is not weakness. It is consolidation within strength. And now let's connect this to the broader financial system. There are growing signs that traditional markets, especially stocks, may be entering a more unstable phase. Certain sectors, particularly financials, are already showing technical weakness. And historically, when stress begins to appear in these areas, money starts to move. The question is, where does that money go? Increasingly, the answer is gold and silver. We are already seeing early signs of this shift. Smart money is slowly repositioning, moving away from risk-heavy assets and into hard assets like precious metals. If this trend continues, it could create a powerful capital flow into gold and silver, not just from investors, but from institutions as well. And when that kind of money starts moving, it doesn't move slowly. It creates momentum, it creates attention, and eventually, it creates a wave of public participation. But before that happens, the market usually goes through one final phase, a period of doubt, confusion, and volatility. And that is exactly where we are right now. As we move forward, there are a few key levels and signals to watch. For gold, reclaiming and holding strong near previous highs would be a major confirmation that the trend is continuing. For silver, breaking above key resistance levels will signal that momentum is returning. If these levels are cleared, it could trigger the next phase, the acceleration phase we discussed earlier. And this is where things can become very interesting. Because once the market confirms strength, it doesn't just attract experienced investors, it attracts the public. And when public awareness kicks in, price moves can become much more aggressive. At the same time, we cannot ignore the bigger picture. There are strong fundamental forces building in the background: economic uncertainty, potential stress in financial systems, and the increasing role of central banks. All of these factors support the case for gold and silver over the long term. In simple terms, the foundation is strong, the structure is intact, and the potential is still very large. Yes, the early entry points are behind us, but the story is far from over. In fact, if this cycle plays out like previous ones, the most dramatic phase may still be ahead. If you want to stay ahead of these moves and understand what's really happening in gold and silver, make sure to follow Gold Silver Scope, where we break down complex market signals into simple, clear insights you can actually use. And remember, this market rewards patience, understanding, and discipline, not panic.